So you really don't have to do anything. The client opens the account themselves. They deposit the money themselves. They can take it out whenever they want. They can go in, log in, see all the trades, see whatever's there.
Right.
So you really don't have a lot of customer service issues. And so you don't have to send out statements because Interactive Brokers will do that.
Right.
All right, passive traders, you have a treat in store for you today. Many of you know about the option continuum, which is basically, our levels of breakdown of where you are as an options trader. You start with level 1, you don't know anything, and then you get to level 10, maybe if you want to, which is option professional. And basically a professional means that you are so good at trading options that you are now trading and managing other people's money and you're getting paid for it. Many of you have reached out to us in the past and said, hey, I want more information on that. And we haven't really put it out there because I'm not doing it myself right now as a professional. I'm not managing anybody else's money. And so, I'm not the best person to talk to about that, but we keep getting people and being like, hey, I want to learn. So one of our members, Paul Ashcraft, has volunteered to join us today. And I want to thank you, Paul, for coming and helping out. Maybe a couple of months ago, I think, in one of our groups, I think it was a passive group, where I had put in there like, hey, I'm thinking about starting a hedge fund. So I'm thinking about going professional, right? And he reached out and said, hey, I'm already doing it. If you want to talk, and I can answer any of your questions. So we had an amazing conversation. I learned a lot. And I was like, you know what? This would be really helpful for everybody else. So I asked Paul, hey, could you do it again? And we can record it this time. And Paul's like, yeah, sure, no problem. And so he's here. Paul, thank you. Thank you for being on. Thank you for taking the time to do this.
Thank you very much. It's a pleasure.
And Paul is a member of of a lot of our programs. So Passive Trading Formula, the Blank Check, and now the Credit Spread Mastery as well. So, it's good to see that, hey, if you're a money manager, then you're continuously learning new things to help out your students or your clients, I guess. So, Paul, tell me, why did you get into management? What was it that drawed you through that?
Well, I sort of got tricked into it. I'm a CPA by trade, and I had a client who was becoming an NFL player agent, and he trusted me and wanted me to help him manage his people's NFL players' money. So I started the licensing process at that time, and so that sort of tricked me into it. So that sort of fell apart, and then he wasn't getting any more leads for what he was doing. So I basically continued it since then. So
okay. So were you already trading on your own or before that, or did you learn as you went?
Yeah, I've been trading, for quite a while, off and on. So yeah, I've had some experience at trading.
Okay. So you were comfortable you could do it.
Kind of, sort of, yeah. I knew I needed to learn. I knew I needed to learn some more, but yeah, I felt like I could. I knew enough about the world to do that.
Okay. And so you are known as what is our RIA, a registered independent advisor?
Right, that's correct.
So that's one of the ways of managing money. What exactly is an RIA?
It's basically a firm that is licensed by the FINRA, basically, and you are licensed to where you can manage other people's money.
Mm-hmm. And RIAs are fiduciaries, right?
That's correct. Yeah.
Yeah, right. Because a lot of people don't know the difference between a fiduciary and a non-fiduciary. And so a fiduciary, if you don't know, you are legally bound to do what's in the best interest of the client. A lot of these other companies that people think about when they're talking about money management or wealth advisors, retirement advisors, all these words that they use, they have no license, or maybe they do have a license, but they're not a fiduciary. So they're not required to do what's best for the client. And so they can sell you a product that they get the highest commission on, even if it's not really a good thing, a good fit for you. So that's why it's always
one of the ways I deal with that fiduciary criteria is basically whatever I do for other people, I do for myself.
Okay. Interesting. So what does it take to open an RIA?
Well, if you want a legal structure, and like I have an LLC that I created for that, and I had to pass a Series 65 test, which is like an SEC test, and you have to come up with some kind of agreement you have with your clients that's approved by FINRA to sign them on as clients. Those are the basics you have to do.
Okay. And like, how long did it take you to go through all that? Remember?
I'm gonna say basically 6 to 9 months.
6 to 9 months. Okay. And how long have you been? How long have you been a RIA, an advisor?
Since 2014, so roughly 8 years. Yep.
Okay, awesome,
Yep.
cool. And for those of you, I'm going to repeat it later on, but Paul's business website is businessadvisors.pro. So if you need a good advisor, please reach out to Paul, and I'll repeat it at the end, and we'll put it in the show notes. I just want to get that out there.
And that's mainly my CPA website, just so you know. So
okay. All right, cool. Businessadvisors.pro. There you go. And then,
and on another note, I've sort of been hesitant about creating my wealth advisors website because you're just under scrutiny when you advertise things. So I've sort of steered away from that a little bit.
Interesting. Okay. So I guess there's certain things you can say and certain things you cannot say. And
yeah, basically anything you put out there to the public, you have to like monitor it for like 5 years and they could question you about it anytime. So I figure one way to get around that is just not to do it.
Okay. So then that leads me to my next question. Like, how do you find clients if you're not advertising?
Well, I have CPA clients.
Mm-hmm.
So probably like half the clients I have in my wealth advisors from CPA side. The other thing is like from friends and referrals from other people who've used me.
Okay. So it takes time to build all that up.
Yes. And I'm currently working on more advertising.
Okay. All right. So the advertising is possible. It's not like it's restricted, but you have to be careful of what you do and how you do it.
Yes.
Okay. Let's see here. Now, what are your clients looking for? Because, if somebody comes to you and says, hey, I'm looking to make more money, obviously, but they have so many choices. They could do it themselves. They could go to like a Fidelity and have them do it. They could go to, if they're really rich, they can have their own private, like, Bank of America, Merrill has their own private wealth people. So when they come to you, what do they tell you? Like, what are they looking for in terms of an advisor?
Well, I mean, I had someone recently come to me and, when we're signing them up and everything, I'd say, if we're here a year later, what's your criteria for saying I did a good job? And he wanted a 10% return, which has been difficult in this market, but that's one thing. Another thing, most advisors out there, they just basically they're buy and hold people. I mean, and they just stick things in a bucket and don't look at it too often. So I basically say that I'm actively working in their account, and I'm not going to just put it there and not be looking at it.
Okay. So obviously you probably tell them about your options experience and the different types of strategies you use.
Yeah, a lot of times it's just the casual person wanting someone to manage their money. That was, if I tried to tell them all that, it would go way over their head.
Okay.
You know what I'm saying? Because it took me like 2 years to talk about options to actually start doing it myself. So I try to be a little bit conscientious about what they can and cannot handle information wise.
Right.
I'll be glad to talk about it if they want to, but I'm not going to talk too much about it.
But I bet that would set you apart, right? It's like, hey, we can do plain vanilla stuff, or we can do, if you're a little bit more aggressive, then we can do this and this and this. And then if it goes over the head, that's fine. But as long as they're like, whoa, this guy knows what he's talking about.
Yeah, definitely. That set me apart. Because like, in my CPA world, I deal with investment advisors, and like no one that I know of is actively managing accounts. I mean, like, every week or things like that.
Yeah, they just don't. I mean, part of it is they have, depending on where they are, some of these guys that I know, they have broker dealers, and the broker basically tells them what they can do and what they can't do. And trading is like, no, you're not doing it. They can't, they're not allowed. And so, we get clients that are financial advisors. They come in, they're like, oh yeah, I'm a financial advisor. Like, oh, then shouldn't you know all this stuff? And they're like, no, I don't do any of this for my stuff. I don't know. They don't even teach us this stuff in financial advisor school. So it's like, what's the call again? I'm like, oh my God.
Yeah, most of them are just like, I call them salespeople.
Mm-hmm.
And again, they don't necessarily know that much about investing. It's more about they have relationships with people, and they train their people to be accustomed to 5 to 7% returns. Mm-hmm. So as long as you can do that, that's not a high mark.
Yeah. Like, when I go to a dinner party or whatever, and it always comes up, so what do you do? It's like, well, I teach people how to do this. And at first they're like, really? Is that, what do you mean? And then we tell them a little bit about it, and they're like, oh yeah, we try to aim 4 or 5% a month. And they're like, what, a month? Really? Oh, wow. I got to learn about that. And then, you explain a little bit and then they're like, bored. And then they go talk to somebody else because, it's cool. They want it. They just don't want to do the work.
Mhm.
So that's cool. Now, as an advisor, how do you charge? Like, what do you charge? How do you do it?
So I have what's called a Series 65 license, and so I'm able to charge a percentage of what assets are under management.
Okay.
So the basic generic charge for that is generally 1% of the assets under management.
Okay.
But if I'm doing more as I move into different strategies, things like that, I'm probably going to up the fee a little more just because it is active trading.
It takes more time. Yeah. Yeah. Because I remember way back when I had a guy at Ameriprise. And he was my advisor, and yeah, he would charge a minimum of 1% on assets every year. Every time you put money, you gave him money, they would take 5% off the top. And then every mutual fund, every index fund, whatever that they put you in, and most of them were, Ameriprise products, each of those things would have a separate fee every year. So, I mean, I got dinged left and right. I didn't know what I was doing at the time. I was thinking, I'm going to, I'm smart. I got an advisor, but yeah, he was the one getting rich. And so
they made that money whether they go down or go up.
Yes, sir. Yeah. I mean, they take the money right up front, 5% off the top as soon as you make a deposit. It's like, man, you haven't done anything. Even if I turn around and ask for the money back, I just lost 5%.
Right.
Do you have is there a lot of overhead for being a advisor? Do you need a large staff?
Right now it's just me. And so I already have all my setup for my CPA business. So there's not really that much more to do overhead wise for this.
And you can run it from the same location?
Yes. Yes.
Cool. Okay. So then who does the back end stuff, statements and compliance, audits, all that stuff?
So we use Interactive Brokers as the broker dealer. So they basically, so all my clients have their own account set up with them, and it sort of goes underneath my master account.
Mm-hmm.
So they take care of all. They can get a statement from there anytime they want to, figure out what their balance is, and if they need to take out money, they can contact them and get the money taken out. So they sort of doing a lot of the back office stuff.
Awesome. So you really don't have to do anything. They open the account themselves. The client opens the account themselves. They deposit the money themselves. They can take it out whenever they want. They can go in, log in, see all the trades, see whatever's there.
Right.
So you really don't have a lot of customer service issues, and so you don't have to send out statements because Interactive Brokers will do that.
Right. And one of my strategies is if someone is, I call it high maintenance, then I probably can't handle that. They probably need to find someone else because,
right.
I got enough things to do as it is. So.
Awesome. Cool. And then, so you don't handle any of the money either because it just goes straight to Interactive. So you're like hands off, like, hey, I'll do the trades, but I'm not touching your money. So you don't have to worry about me taking your money and running away and flying to Bermuda or something.
Yeah, just like the Bernie Madoff deal where they call it having custody of the funds, and he had custody. And so they talk about that when you're going through your testing and things like that, about having custody and not having custody and things like that. So it's a big red flag.
Yeah. Yeah. Because I mean, like I've been looking into starting my own hedge fund, using the passive trading strategies and such. And I looked at RIA first, and then I looked at, hedge fund as another way. And I think from what I've been able to find so far is that if you start a hedge fund and you don't charge any management fees, you don't need the license. You can set it up in a way where, you only take a percentage of the profit. So if there's a gain, you can get a percent, but you don't get that yearly management fee. If you want the yearly management fee, then you do have to have a separate RIA to do the management of the fund.
Okay. I didn't know that.
Yeah. So I thought that was pretty cool. So we've been looking at that as well, different things. So now what percentage of your management is active versus, index funds, mutual funds, et cetera?
I'd say about half. Yeah.
Okay. And all of the clients are okay with that, or do you do client by client?
I pretty much put everybody under the same model.
Mm-hmm.
Yeah. So.
Okay. And so with Interactive, how does that work? Do you have to go into each account to put a trade on, or you just put one trade on and it just trickles down?
So I have a master account, and I can set up different classifications. So I could buy 1,000 shares of IBM and have it spread it between all the accounts. I did that.
Okay. Okay.
So the only thing I have to watch out for is some of the accounts can trade certain things, some can't. Like IRAs cannot do, futures and naked options and things like that. As far as at least on the credit side.
Right. Okay. All right. So does that get confusing? If you want like, okay, I want like say IBM, I want my IBM stock to be 5% of all of everybody's portfolio.
Yeah, that would be a different equation. So basically, like I did a trade today where I figured, I want to take a $10,000 risk.
Mm-hmm.
So I divided it by what that option was going for, and I bought that many contracts to take on that kind of risk. So I'm not necessarily rebalancing everyone. It's usually trade by trade. So I'll put it on certain circumstances, set a stop loss, things like that.
Okay, cool. So you can do it as easy or as simple as you want, or you can make it as complicated as you want. It's all
Yeah.
up to you.
Yeah.
That's nice. So what types of trades do you do?
Well, some of what you teach. So I do some swing trading,
Mm-hmm.
and of course, credit spreads and things like that.
Okay.
And some of the dividend paying stocks and covered calls and things like that.
And do you do any oil futures options?
Well, I'm not. I'm just at the point of getting licensed for that.
Okay,
So
that's a separate license.
that's a separate license. Yeah. So you have to get licensed through the Chicago Board of Trade, the NFA, and National Futures Association.
Okay. And then will you be able to do it the same as everything else through Interactive Brokers?
Yes, I think so.
Okay.
Sometimes you don't know until you actually do it. So I think I can do it pretty similar.
Sweet. Okay. Now, as an RIA, do you also advise your clients on other alternative investments, real estate, crypto, anything else? Or is it just stocks, bonds, options?
I'm always getting asked questions, because I'm in, whether I'm in the CPA world or the RIA world, I'm getting asked questions. So I will advise on that if I think I have a good opinion.
Okay. And
I'm not real up on crypto. So
right. Are you still bound by the same fiduciary type rules on that, or
you could come under some scrutiny? If you make an offhanded comment and then someone does something crazy, and so you got to be a little careful.
Okay. All right. With the interactive account or the broker dealer, is the software any different? Like versus if you open a regular account by yourself, is there anything you have to learn, a new platform, or is it basically the same thing?
It's pretty much the same platform. You just have to understand how to do the trading, like I was telling you about, like allocating between all the accounts. But the platform itself is basically the same.
Sweet. Okay. Cool.
Yeah.
What do you see as the future of money management? Because they got these robo advisors now, and they got like Robinhood trying to get everybody to trade on their own. And so what do you see down the pike? Do you see like your clients are like, yeah, I'd rather just have you do it, or robots or whatever?
Yeah, I can see, some of the robot picking up, but on average, most people out there don't know hardly anything about the investing world, my average client. So I think it's going to be still a good field in 5, 10, 20 years, we're way up currently doing it.
Okay. And who is like your average client?
They're probably like 50 years old, 50 to 60, and probably, got assets anywhere from, 50 to 50,000 to over $1 million,
Mm-hmm. And do you have any limits on who can invest with you and how much?
No, I'm not just going to take on any account right now. It would need to be over a certain dollar amount for me to, I always have to keep that in mind about, do I want to take on a $5,000 or $10,000 account? Because it's going to be extra work taking that versus the account. At least at 25,000, you don't have to comply with the day trading rules, because if you accidentally in and out of three trades in a week, then your account gets shut down for a little bit, so
right.
have to do with that. So yeah, so I'm trying to gradually move up from like a minimum of 25,000 to 50,000 to 100,000.
Okay. And then you also have a certain criteria, like a certain person that you want, right? Somebody that can handle the options and that can handle that, because it does swing a little bit. So if they have a $5,000, $10,000 account and they freak out if they lose $1,000, obviously that's not the right person for you anyway.
Right. Yeah. On that same note, I had a client the other day that they have in excess of $500,000 with me, and they're wanting to know how they could put in more money since the market was down, so they could capture the down market. So I love that kind of client. You expecting them to call you, tell you why is my account down, ask you that question. Instead, they're saying, how can we put more money in?
Right.
Take advantage of the down market.
Yeah, that's a smart client.
Yeah.
That's got to be your email, going out like, hey, it's time to give me more now. We're double down on your investments. Okay. Now, how has being a money manager improved your own trading, or has it?
Well, I mean, it's made me to seek out new avenues of investing, because, I'm looking out for my clients, but in the same token, when I do that, I find things that I can use too, like I don't know if I would have found the whole future options without that, without, seeking out new investment strategies, so I could do a better job for my clients.
Mm-hmm. Okay. Now we've had a lot of volatility lately, and you've alluded to it already, with stocks down about 20% or so right now. How do you deal with the investor concerns or expectations?
I'm continually learning that. So the more proactive you can be with that, I find that that's better. Like if you have a bad day or a bad trade that affects it so much, then maybe call and talk to them about it versus waiting for them to call you. Waiting for them to get their quarterly statements and they call you. So
right. So do you find that a large portion of your job is just talking to people and just calming them down, or explaining certain things to them, or educating them?
In the beginning, yes. If someone's with you for a while and they haven't understood your ways and why you do what you do, and it would be generally in the first year of a client relationship you would need to do that more. But there is sort of them get to know you, you get to know them, and sort of like a training curve there.
And now most of your clients they know you, or they were referred to you, right? So there's already that trust built in from the beginning.
Yeah, most of them, yes.
Yeah. So if you advertise and somebody comes in cold, they're like, oh yeah, I like what you're doing here. Here's $100,000. There's going to be a lot more back and forth.
Yeah.
Okay. So how are you handling the volatility? Like when somebody calls up and says, "Oh no, my account is down." What do you do there?
Well, number one, what I did
tricks.
when I saw the market starting to tank, I basically was going more into cash. So like I had a client want to know why we aren't investing. I said, well, I'm waiting for the market to give me an indication it's found a bottom, or it is headed back up. So I don't want to. I'm not a bottom picker, but I don't want to like ride it further down. So that's one way of dealing with it, and they seem to appreciate that quite a bit, understand that. So I don't think that's something you get out of a typical advisor. So
yeah. But what if somebody calls you and says, oh my God, I'm down 10%. What am I going to do? I can't handle this. How do you handle that? Have you ever had that happen?
Yeah, I have. I've tried to change up their strategies a little bit to get them a little more solid, or maybe not trade as much in their account. Just being a little more cautious.
Okay. So you can actually choose, like, let's say we talk about that IBM thing. So if you're like, hey, I'm buying IBM, you could choose and say, okay, don't put it in this account and this account. Just put it in all these other ones.
Yes.
Okay.
Yeah.
All right. So you can actually tailor it, because like if somebody goes like, yeah, I just want to be long stocks, or I just want tech stocks, and I just want, credit spreads, so that you can do that.
Yeah.
Okay.
Yeah.
So do you have any shortcuts that you could share, for somebody that's thinking, oh yeah, this sounds like cool. I want to get into this RIA business. Anything that you probably didn't know ahead of time that you would have liked to have known?
It's sort of like a unknown territory, because when I was doing, I couldn't get anybody to actually figure out what a Series 65 license would do, and I was sort of going into it blindly a little bit. So I think the number one thing is maybe they can contact me, talk to them, but shortcuts is I don't know, like I had to find a place to take the course for that, and then I hired a guy to tutor me some, and there's these firms out there wanting you to sign up with them for them to do all like your paperwork and so forth. And I just sort of like fumbled my way through it and plagiarized another agreement online that I could use. And so and the other thing is to know, if you're in this world, you will get audited.
Personally?
Well, your investment firm.
The investment,
RIA. Yeah. Like I'm in the CPA world, and I probably will never get audited for the CPA world. But the investment side, I will get audited probably time and time again. So far, it's only been once by the state of Florida, but yeah.
Okay. Yeah, that's a good thing, I guess, that the advisors, and like you said, the Bernie Madoffs, you keep them at bay as much as you can a little bit. So So some of that is, I guess, from a consumer standpoint, that's a good thing to hear.
Yeah, but
Okay.
a lot of us, they don't necessarily understand the world as much as you do, and it's more like them checking a box somewhere and say they asked this question or did that, but they don't really. I find they don't really necessarily know exactly what they're doing.
Yeah. So, but do you mean tax audited or audited by like the SEC?
Audited by the state, by the financial regulatory people for the state you're in.
The state regulatory. Okay. So every state has their own regulatory stuff that you have to apply for.
Yeah. So just sort of background here. Usually, if you're managing under $100 million, you're managed by the state. But then once you hit $100 million, then the SEC is basically your watchdog. It's going to look over your shoulder.
Okay. All right. Cool. And you're in Florida, right?
Correct.
But you can take clients from anywhere.
I can, but different states have different rules. Most of them will allow you to take 5 to 15 clients and not really be registered with them. But then once you hit over that threshold, they want you to fully register with them. Okay. There are a few states that require you, if you get one client, they want you to be registered. And Louisiana is one of those states.
So I guess depending on how much capital the guy's going to give you, whether it's worth it to register there for
exactly. Exactly. Yeah.
Okay. All right. So would you, knowing what you know now, are you happy that you went this route?
Ask me again in a few years.
Well, you've been doing it already for like 8 years, so kind of got some kind of track record here.
Yeah, it's been it's been definitely a learning curve, and from the regulatory side and then from the investment side too. So yes, I'm glad I did it, but it's had its rough moments.
Mm-hmm. Like, well, give me an example.
Well, if you lose on a trade, it can affect your account and other people's accounts. So that's probably the biggest things that's happened to me. So, and then you got to figure out how I'm going to tell this person this.
Okay, so
trying to get yourself in that position, but
right, but
you probably will a few times.
Yeah. So how did you deal with that?
I prayed a lot. I basically, if I knew it affected someone so much, I call them and talk to them about it. But in a certain situation, like because it was spread over so many accounts, it didn't really affect anyone that much. Mm-hmm. So it wasn't that as big of a deal. Like, if I'm managing $5 million of money and I lose 20,000, the most someone's probably going to lose is maybe 2,000 or 3,000. So the overall number is a big number, but when you spread it between all the accounts, it's not that big of a number.
Interesting. Okay. Yeah. I mean, that thing right there is like the biggest thing that's kept me out of it for all these years. People have been asking me from the beginning, like, hey, can you take my money? I'm like, nope. Because I don't know how I'm going to handle the stress. I don't know if I'm going to be able to sleep. I can lose my own money. Market down 20%. Okay, whatever. It'll go back up. I got time, but somebody else, if I lose your money, like, I don't know. I don't know how I'm going to handle that. And so that's the one thing that's really caused me to be hesitant up till now. And I agree with what you said about not having that much information out there. I mean, there are companies out there that will, like, if you want to be an RIA, you type in, how do I be an RIA? And there's a company that, hey, if you give us like 30 grand, we'll do all the paperwork and we'll file everything for you. It's like, okay, but what do I actually get? They're like, well, you do the paperwork. Well, what about after that? How do I get clients? How do I do this? How do I do that? They don't help you at all. Yeah. And these two guys, they had approached, they had talked at because I'm, OptionGenius is in what's called the financial publishing space, that world. So we have our own little conventions and all the gurus come and, hang out and talk marketing and stuff. And so there was these two guys who were speakers, and they were telling all of the financial publishers that, hey, you guys need to get into the management business because you guys already have all these clients. They already trust you, and they probably have a lot of money because people coming to me, they say, hey, I want to learn how to trade options. Okay, cool. And how large is your account? They're like, oh, 50,000. Like, okay, cool. And they trading options with 50,000, but they also have like maybe $1 million IRA that they're not touching, or their wife has $500,000 that is with some other financial advisor that she doesn't want her husband to touch with options. So it's like, yeah, everybody that comes in has a lot more money. So if you start an RIA or an advisor, then, they'll give you that money as well. And you can make all this money. And I was like, okay, that's interesting. But, what are the legalities and all that? And they wanted, I don't know, up to $1,000 plus a percentage of the company to actually teach me all this stuff. And I'm finding that there's a lot of secrecy, as you can say, and Wall Street, I think, puts it like that on purpose because they don't want everybody to know what they're doing and that they don't know what they're doing pretty much. So cool.
Yeah, I don't know that's intentional, but it just I think there's so few people who are looking to do it, and like it's not a widespread throughout the population thing, so you don't find as much about it, you know.
Maybe. Okay. Yeah. I'll take that. Yeah. Cause like, even like, what is the difference between an RIA and a hedge fund? I've been beating my head, like which way do we go? Which way do we go? If we go this way or this way, what are the pros? What are the cons? And there's like no one person that can tell me. If you want to go to hedge fund, they got a little hedge fund world and you gotta pay the dues to get in. If you want the RIA world, then it's more common, but it's for the guys, for people who are like, yeah, I just want to put everybody's money in an index fund, so it's like what you're doing is totally different. Like I have not met any advisors that are actually, trading that actively for people. So, I mean, compared to the other guy, Joe Schmo, that charges 1% a year or 2% a year just to put their money in an index fund compared to what you're doing, your value is just so much more. But it does seem like it's very similar to a hedge fund where, a hedge fund is a little bit different where all the money is pooled into one spot and then, the trader controls it. You're doing kind of similar where you can look at it and be like, okay, I got, $10 million under management. How am I going to split that up into different trades? And it just happens to be in different people's accounts.
Mm-hmm.
So have you ever thought about increasing your rates? Because like a hedge fund, they can charge a percentage of the gains. An RIA can't. Can they do that?
They can do that under certain particular criteria. I think like you have to have an investor who has at least $2 million in investable assets.
Okay.
They have at least $1 million invested with you. And then you can have certain arrangements where you say, well, if I make whatever percentage I make above what the S&P does, you'll split it with me or something like that,
Okay. So it gets more complicated.
Yeah. It's very, it has a lot of criteria to it. It can be done though.
Okay. Yeah. Because
I would say the hedge fund world, I mean, based on what you're telling me is, because you're basically commingling all the funds, right?
Mm-hmm.
So you have to do like a statement for each person or something.
Yeah. Mm-hmm.
So I think the advantage is you can just commingle it all and then do whatever you need to do. And then at the end of the day, you somehow allocate it.
Right. So the thing with the hedge fund is that all the investors have to be accredited.
Okay.
So accredited, as you know, probably, you have $1 million net worth, not including your house, or you're making upwards of 300,000 a year or so, basically. So,
or at least they have to tell you they're accredited. Right.
I think we would actually want them to be proof, like, hey, you gotta give me proof, otherwise we're not letting you in.
That was actually in some of my testing I just did is like, yeah, you want this criteria, but are you actually gonna go check it? No. So
interesting. Okay. Because I mean, the government says that the hedge funds, if you're an accredited investor, you should be smarter than the average bear. And so if you lose money, it's not that big a deal. Like you were smart enough to get into it. Somebody with a $5,000 or $10,000, that's my life savings. No, sorry, you can't invest in this. Even though the hedge fund might be like doing 1,000,000% a year, you can't invest because you're not accredited.
Right.
RIAs can take basically everybody. So that was one of the things like, hey, somebody comes in with 50,000 as an RIA, you might just take it because it's not that much paperwork. It's not extra for you. But for a hedge fund, yeah, no, I can't do it. Because I gotta pay the auditing company. I gotta pay the statement company. I gotta pay the customer, whoever's doing customer service and answering the phone and doing all that, and salespeople and all that. So 50,000 is not gonna cut it. So the limit is a lot higher, for sure. Okay.
Yep.
So yeah, that in that sense, totally different world, but very similar. From what I'm seeing is that you're doing probably what we're gonna be doing. Similar. So
you probably can't take qualified money like IRAs and things like that.
I think they can. I think they can. Yeah.
Okay.
I think they can. As long as a person is accredited. And so there's different regulations, 506(3)C or 506C, 506D. Those tell you, if you can take accredited, non-accredited, and then can you advertise or not. I'm still learning all this. It's all different. Because like if you start a real estate fund, different from if you're doing a hedge fund versus a private equity fund. So some of the rules apply to everything. Some of the rules are just separate. So I'm still learning all that. but I know that the interactive brokers people, they've done webinars in the past with attorneys. So if anybody wants to start a hedge fund, you can still use the interactive brokers platform. And they actually have a separate portal, I think, for hedge funds.
Yeah, I've seen that.
You've seen that too, where you
Yeah.
can actually see what other people are doing and what other trades that they're making.
I didn't know about that, but I just knew that they had some kind of hedge fund portion of what they were doing. I didn't know exactly what it meant.
Yeah. So what they said was that, the attorney was like, it'll take several, maybe $30,000 to set up your hedge fund. You could probably do it with a smaller amount if you want to start an incubator fund, which is like, if you have your own money and you put in, say, $300,000 and you trade it as if it's a fund, and it only, maybe that paperwork might be like 7,000, and you set that up, you trade it as a fund, you build up your track record. Be like, oh, hey, look, I was trading for 6 months, I got this, and then you can start advertising it and you convert it to a full fund. And then you can say, oh, look at my track record, this is what I did. And then people can come in for the full fund.
Nice.
So that was one of the things that they were talking about. But so yeah, we were looking at interactive, but the one thing with interactive, their software is a little bit more clunky or a little less user friendly than
It's not the most user friendly software, no.
Yeah, with my personal accounts. Now, so do you still trade on your own on the side, or is all of your money in the big?
I have some money still in the huge fund, and then I have an account on the side I trade to.
So that separate account, did that change at all after you got licensed? Because they always, when you open an account, they always ask you, are you licensed? And then I don't know why they do that. Did it change anything on your account?
Not that I recall. Yeah.
So
and there's an occasions where you can link up an account with the master fund and you can delink the account. So I think at one time it's actually my 401k account for my accounting firm attached to the RIA account, but then I detached it. One of the main reasons was for futures, because I knew I wasn't qualified to do futures for the whole fund, but I could under my own account.
Oh, okay. So you have to keep it separate to do the futures options.
Yeah.
Until you get licensed by them.
Okay. Right.
And is that like a lengthy process as well, the futures options license?
Yeah. It's I took a Series 3 exam back a month or so ago. So I studied for 2 or 3 months, and again got a tutor.
All right. How many clients do you have right now?
I would say about 20, 25.
Okay. All right. Cool. And so from a financial standpoint, has it been worth it?
Yeah, it's been really good. Yeah. My intention when I know that, once I got into it, my intention was over the years, at retirement age is have my income shift from my CPA business over to my investment business. So I could do that, say 2 hours a day in retirement versus, doing tax seasons and all that with CPA business, so.
Okay. Is that still the plan?
Yes, still the plan.
Awesome. Cool. So yeah, I mean, managing millions of dollars of assets in 2 hours a day, that sounds really good to me.
It might be a pipe dream, but that's what I had in mind though.
I think you could do it. You're on your way.
Yeah.
Cool. Awesome. Sweet.
Yeah.
Is there anything that I haven't asked you that you think like, oh yeah, people need to know this?
Not that I recall, not that I know of. No. I mean, one thing you have to, like for instance, you have to have an email account that you have to retain all your emails for at least 5 years. Okay. That's one thing to keep in mind. And I have to send a balance sheet and income statement to the state of Florida every year and get someone to notarize it. And you have to upload information to the FINRA site at least once a year. And that's where you pay your, I'm licensed Louisiana along with Florida and things like that. So I pay my fees for those licensing through FINRA's website.
Okay. So. And you had told me that the fee that you charge for management, that comes out, Interactive Brokers basically pays you every quarter?
Quarter, yeah.
So you don't have to, go ahead.
Well, you're fixing to ask me if I had to bill it, right?
Yeah.
Okay. So they do it automatically, but when I got audited, the state wanted me to actually create invoices. So the answer to your question is, I'm not sure what the real requirement is, but so far, I guess I met that criteria then. So I'm not actually creating invoices every quarter right now.
Yeah, I mean, because I mentioned those 2 consultants that I had talked to, they had told me that I would have to invoice everybody every quarter. and those people would have to pay me directly. So it wouldn't be taken out of their account. It would be sent directly to me. Like they would have to write a check every quarter. And I'm like, that's a pain in the butt, you know.
That's pretty cumbersome.
Yeah, if a customer has to pay, you know, a big check every quarter for management fees, and then especially if you have a down year, and he's like, what am I paying for? No, I'm not paying for this anymore. And you don't get paid. So
Yep.
yeah, I was like, okay, that's a big red flag, but I'm glad that that's not true. Cool. Okay.
One thing I have figured out there is there's an account I was going to take from someone, from one advisor to me, and they had all their fees like totally hidden with all these mutual funds and things like that. And so like, you know, in that account, I was going to charge 3%, but we weren't able to ever get to the bottom of what the other advisor was charging. So even though they have a lot of disclosures and things like that, I think we could have pressed the issue if we really, really wanted to, but you know, I ended up losing that account.
So did that customer realize that he's being charged all these things?
No.
No clue.
No. I mean, whenever I sort of parted ways, and I said, you guys at least need to figure out what they're charging you. You'd be surprised at the amount of ineptness out there and people who are actually hiring advisors. Like most people do not keep like their annual statements. They couldn't tell me how much they made last year, you know, because generally when I'm taking on an account, I want to know what their track record's been. Sort of what do I need to beat to make them happy, you know? So a lot of them are not that attuned to that.
That's crazy. Yeah, I mean, people, they work their entire lives to save up money and invest it so they can retire, but then they don't pay any attention to the money itself. Oh boy.
I think it's because they don't know that much about it, so they wouldn't know what to do if it was not what they wanted, you know?
I mean, you gotta take a little bit of time to at least read the statements and figure out where's the money going. And it could be better disclosed. You know, the statements could be easier to read. That's definitely sure. But it is what it is for now.
Like I have this account right now. I'm probably going to pick up another 600,000 to 900,000, and I asked them to get their annual statements ready because I wanted to see what they have been doing. You know, so so they didn't know if they'd be able to find those. So I mean, it's like it's weird.
Can't they just like ask their advisor for their statements?
Oh, it might be red flagged to them, and they are looking. So
yeah. Wow. Okay. All right.
It does seem bizarre.
So if somebody was thinking about starting their own advisory firm, what would you say they would need in terms of like, what are the minimums? Like, hey, you should have been in the market for, 5 years, or you got to know XYZ. Is there anything that you would say that, if you can't even do this, then this is not for you?
Well, if they're planning on doing what I do, they probably need at least 3 to 5 years, of their own market experience. But that being said, like I just met with someone the other day, and I could put all my funds through their strategies and just sit and coast.
Really?
They charge an extra 1% or whatever, so I'll back off of my fee a little bit. So you can play the game different ways.
Wow.
So you could do, like I could see a new person starting that and just having these other, because they have what's called sub managers or something like that. I don't know the exact term. Basically, you're hiring other money managers to manage the money you have for your clients.
Right.
Like sub advisors, maybe is what it's called.
Okay.
So I'm not saying it would totally preclude them if they didn't have 3 to 5 years, but hopefully they're drawing on someone's experience to help hold their hand a little bit.
Right. And do you know how much it costs to get it up and running?
I would say 3 to 5 grand.
Wow, that's not much.
Yeah. I mean, if you hire one of these firms, they'll charge you,
right,
5 times that. But.
Yeah. Okay. So wow, the sub accounts. Yeah, actually, I do remember those consultants talking to me about that.
They call it sub advisors.
Yeah, I think that's what it is. And it's like, yeah, if you don't want to do it yourself, you can put your money, you can put your client's money into different buckets, and then they just do it for you, and they charge, and then you split the fees or whatever, something like that. So, and then each broker dealer has different ones. So, like Fidelity or Schwab will have different sub accounts versus what you could put your stuff in.
Right.
Interesting. I just curious, the ones that you had talked to, what strategies were using?
Some like one of them, they're using free cash flow to is our criteria for who they're investing in. So they have like international, they call it cash cow, COW. And so they have international, domestic, and things like that. So they have a different definition of free cash flow. So they're figuring that's the best value, their way of determining value out there, like sort of like a value fund, but their own definition of what value is.
Okay, so they're investing in stocks.
Yes,
Okay.
international and domestic.
And they handle the in and outs, and so you could put a portion of your client's money in there, or you put it all in there.
So it's like an ETF. So basically, you can say I want 20% of my money to go in this domestic one, 20% in the international, and I might, I'm in talks with them, so I might end up doing some of my money that way. But so they're coming up with different sample portfolios that I could use their funds for.
Okay, interesting. And so that must be like a much larger company.
Yeah, I'm not sure how big they are, but they're big enough to where they had like a representative here in Central Florida and some in their back office helping them out.
Awesome. Cool.
I'm not sure their size yet.
Yeah. So, I mean, this rabbit hole is pretty big. You could dive in there and spend a lot of time figuring all this stuff out.
Yeah. So I could see a way I could sit and coast more.
But you're only doing it 2 hours a day anyway. Cool. All right.
Well, maybe when I get into my retirement years, a certain amount of years, I'll just put it in there and just coast.
Mhm.
Be 0 hours a day.
Yep. My neighbor in the office, next door, he's a financial advisor. He's been doing it for, I think, 25 years now. So he's built up, a sizable clientele. And so now he's at the point where he wants to retire, but he doesn't know what to do with the firm. He's like, he makes probably a good 500,000 a year income from it. And he's like, I want one of my kids to take over, but the kids are not really willing. They're not interested. So he's like, I don't know what to do. So he's still there. So
there's been periods of times where, like I said, on the CPA world, I did with other investment advisors, where it's been quite a lucrative market to get your practice bought out by a bigger, let's say Merrill Lynch or something like that.
Mhm.
They pay some pretty big bucks to buy those books of business.
Yeah. Because I mean, one of the things that the consultants told me is that once you get a client, the turnover, meaning the fact that they're going to leave you, is not very high. They're going to stay with you for years and years. So you can count on that money coming in, that fee money coming in for a long period of time, unless you totally screw it up, and then they're going to leave. But
if you play it smart, if you're dealing with someone 50 years old right now, another 10 or 20 years, you're going to pick up their kids and things like that when they need investment advice and stuff. So it's it can be a self-perpetuating thing.
Yeah. And I do like the fact that there's always going to be somebody there willing to buy your company. Because a lot of times in smaller companies, if you're the only person, or if you got 1 or 2 employees, nobody really wants to buy the company. Even if it's successful, nobody wants to buy it, because without you there, they're basically buying a job for themselves, right? Mm-hmm. It's not running on its own. You're the one doing all the work. In this case, yeah, you're the one doing all the work, but they don't need you. They can just, have their own advisors take over. So you still get a pretty decent multiple when you sell. So that's really cool too.
Right. Also, I met in my travels in this world, I've met a company that actually finance you if you want to buy out someone else's practice in the financial advisor world.
So have you looked into that?
I had a conversation or two with them, but I haven't really pursued it further, because I didn't know if I wanted to buy a larger practice.
Right. Yeah.
Because generally it's a 7-year payout to do that. So, 7 years you'd be free and clear.
Mm-hmm. But okay. That would be interesting. Yeah. So a lot of ways to skin this cat. So you would, I'm assuming that if anybody asked you, hey, should I do this? Probably the answer is yes.
Yeah. Talk to a couple people who have done it and sort of figure out if it's a good fit for you, Yeah. It's definitely, it can be pretty lucrative.
Right. And I like the fact that it's like, for you at least, it's more localized, so you're not competing with somebody in California or, Canada or whatever. It's like, yeah, you guys get your clients over there. I'll have my clients over here. They loan me, they trust me. We hang out maybe, and sometimes, so it's not like a competitive situation. So,
right.
Awesome. Are you in any, are there any like, associations or memberships that for advisors?
No, I'm not. I know.
So. But obviously they probably have them, right?
Yeah, I'm just not very familiar with that. I have another advisor or two I hang out with some. We sort of share some ideas. Mm-hmm. So that's all I have right now.
And they're also private, like on their own?
Yeah.
Okay, cool. Okay.
Now, one of the reasons I didn't cover this in the beginning, when I started looking into this whole thing, I didn't want to get clients and then share my fees with other people. that's why I didn't latch onto a bigger firm and start building my clients from there. So that's why I started my own IRA, so they would be my clients and I get all the fees for them, and no one else had rights to them. So that's one of the reasons I did it the way I did it.
Okay. Okay. So what would be the benefits of going with a larger firm? Just the name recognition?
Well, they have one of the biggest things is called compliance.
Mm-hmm.
So like right now, I'm my own compliance officer for my firm.
Okay.
And in a larger firm like that, they have whole departments that take care of compliance for you to make sure you don't get in trouble with the regulators and so forth. So like this other advisor I have, he joined another firm just so he could have that compliance piece to it. But
Yeah.
in his firm, he can't trade options.
Right. Yeah, because they're very limited. Yeah, exactly.
He's trying to talk me into join his outfit, like can't trade options.
Yeah, because compliance says no.
Whereas I'm the compliance officer, so.
Right. So that's why when you said you were thinking about advertising, it's the risk is on you because you're the compliance officer. So you got to know exactly what can be done and what can't be done.
Right.
Right. Okay. Interesting. Cool. Is there anything else? Because I'm out of questions.
I can't really think of anything at this time.
Okay. All right. Well, I mean, thank you for doing this, and thank you for even volunteering to say that.
One other thing I tell you, I looked into going with other companies, other interactive brokers when I started.
Okay.
And like Charles Schwab wanted you to have $7 million you're managing before you could go with them.
Whoa. Okay. And they're the biggest, right? Right now, I think.
I think so.
Yeah.
Yeah. So that's one of the reasons I'm with interactive brokers, because they didn't have any minimums like that.
Okay.
I didn't really check too much further than the other people.
And how is their customer service at Interactive Brokers? Because for personal accounts, they don't have a good reputation.
Yeah, they have a separate line you can call as a professional advisor.
Mm-hmm.
So I get pretty quick attention usually. You know, it's not perfect, but you know, it's decent.
Yeah, but you're happy.
Yeah, I'm not saying that. I'm sure other companies have better customer service, but you know, for right now, I might need to call them a few times, but I get what I need if I need to.
And how are their margins and commissions?
Commissions are pretty low. I don't know the exact numbers. I just know it's less than like $1 per 100 shares.
And who pays that?
Option.
It comes out of the customer's account, obviously.
Right. Yeah. Each person, like when you do a trade that splits between all the accounts, they pick up their own fees for that. Yep.
All right. Cool. All right. Well, thank you, Paul. Paul's website is again businessadvisors.pro. Paul said that he could reach out. You guys could reach out to him if you have any questions. And Paul is also in our other memberships or our other programs as well, passive trading formula, blank check, and credit spread. So if you guys are members of those, you can reach out to him there. You'll find him in the group. And he's been very gracious with his time. So I do want to thank you. And he's very active in the group, and you've been helping a lot of newer people as well there. So appreciate you there. Interesting place, interesting world. And as I dive in, I'm probably going to reach out to you more.
Sounds great.
So
I appreciate it.
Thank you. Thank you so much. And we'll talk to you soon.
Thanks, Alan. Take
Alrighty.
care.